Question 1. John has a disability insurance policy that provides a benefit amount of $3,000 per month after a 90-day elimination period. His monthly income before becoming disabled was $5,000. He is unable to work for 12 months due to his disability. However, he is also receiving $1,000 per month in workers' compensation benefits during the same period. What is the total disability benefit that John will receive for the 12 months? A. $3,000. B. $2,000. C. $1,000. D. $4,000. Answer: B. $2,000. Explanation: disability insurance policies typically include provisions that coordinate with other income sources, such as workers' compensation. In this scenario, John's total disability benefit is calculated by deducting any other income, e.g. workers' compensation, from the total monthly benefit. His original benefit amount is $3,000 per month. Since he is receiving $1,000 in workers' compensation, his total disability benefit will be reduced to $2,000, $3,000, $1,000. This coordination of benefits ensures that the combined income does not exceed a predetermined level, which in this case is $3,000. Question 2. Which of the following statements about disability income insurance policies is true? A. The benefit period for short-term disability policies is generally longer than for long-term disability policies. B. The elimination period is the amount of time a policyholder must wait after becoming disabled before receiving benefits. C. A cost of living adjustment rider will decrease the benefit amount over time to reflect inflation. D. Partial disability benefits are paid only when a policyholder is totally disabled and unable to work. Answer: B. The elimination period is the amount of time a policyholder must wait after becoming disabled before receiving benefits. Explanation: the elimination period is a key component of disability income insurance policies. It is the time between the onset of a disability and when benefits begin to be paid. Typically, this period ranges from 30 days to several months, depending on the policy. The other options are incorrect for the following reasons. Short-term disability policies typically have shorter benefit periods compared to long-term disability policies. C. COLA riders increase the benefit amount over time to keep up with inflation, not decrease it. D. Partial disability benefits are paid when the insured can work but at a reduced capacity, not only when totally disabled. Question 3. Scenario: Sarah is employed as an accountant and has purchased an individual disability insurance policy with a 90-day elimination period and a benefit of $4,000 per month. She suffers a back injury that temporarily prevents her from working, but she is able to continue working part-time. Her doctor confirms that she is only able to work 20 hours per week instead of her usual 40 hours. Based on her condition, Sarah applies for partial disability benefits under her policy. Which of the following is the most likely outcome? A. Sarah will receive the full $4,000 per month benefit for the entire period of her disability. B. Sarah will receive a reduced benefit based on her income loss and her partial disability status. C. Sarah will not be eligible for any disability benefits due to her ability to work part-time. D. Sarah's disability benefit will be automatically terminated after 90 days. Answer: B. Sarah will receive a reduced benefit based on her income loss and her partial disability status. Explanation: most disability insurance policies offer partial disability benefits if the insured is unable to work full-time but can still work in a reduced capacity. In this case, Sarah is able to work part-time, but she has lost income because of her disability. Therefore, she will likely be entitled to a reduced benefit based on the percentage of income loss. Disability benefits for partial disability are typically calculated based on the amount of income the insured can no longer earn due to the disability. A. The full $4,000 benefit is only payable for total disability, not partial disability. C. Sarah is eligible for partial disability benefits as she has lost some capacity to work, even if she can still work part-time. D. The 90-day elimination period only affects when benefits begin to be paid, not whether the benefit continues. Question 4. Which of the following is a characteristic of long-term disability insurance? A. It typically provides benefits for up to 2 years. B. It usually covers a larger percentage of the insured's pre-disability income than short-term disability insurance. C. It covers only work-related injuries and illnesses. D. It typically has a shorter elimination period than short-term disability insurance. Answer: B. It usually covers a larger percentage of the insured's pre-disability income than short-term disability insurance. Explanation: long-term disability insurance generally provides coverage for longer periods, often extending from 2 years up to retirement age, and is designed to replace a larger percentage of the insured's income compared to short-term disability policies. Short-term policies tend to offer quicker payouts, but usually cover a smaller percentage of income and for a limited duration, often up to 2 years. The other options are incorrect. A. Long-term disability provides benefits for extended periods, not typically just 2 years. C. Long-term disability insurance generally covers both work-related and non-work-related disabilities. D. Long-term disability usually has a longer elimination period than short-term disability. Question 5. Which of the following factors can influence the premiums for an individual's disability insurance policy? A. The policyholder's occupation, health history, and income level. B. The length of the benefit period only. C. The state where the individual resides. D. Whether the policyholder has a pre-existing condition or. Answer A. The policyholder's occupation, health history, and income level. Explanation: disability insurance premiums are typically based on factors such as the policyholder's occupation. Higher-risk jobs generally lead to higher premiums. Health history: individuals with pre-existing conditions may face higher premiums. And income level: higher income generally leads to higher benefit amounts, which impacts the premium. The other options are less relevant. B. The length of the benefit period affects the benefit payout, not the premium. C. The state may impact regulation and benefits, but not directly the premium. D. Pre-existing conditions are relevant but influence underwriting, not premium adjustments on their own. Question 6. Which of the following is an exclusion commonly found in many disability insurance policies? A. Disabilities resulting from accidents outside the workplace. B. Disabilities resulting from participation in a hazardous hobby like skydiving. C. Disabilities resulting from chronic illnesses covered under Social Security Disability Insurance (SDI). D. Disabilities resulting from mental health conditions. Answer: B. Disabilities resulting from participation in a hazardous hobby like skydiving. Explanation: many disability insurance policies contain exclusions for disabilities resulting from high-risk activities such as skydiving, bungee jumping, or other hazardous hobbies. These exclusions reduce the insurer's risk exposure. A. Disabilities resulting from accidents outside the workplace are often covered, especially in individual policies. C. Social Security Disability Insurance (SDI) coverage doesn't typically affect the exclusions found in private disability policies. D. Mental health conditions may be covered, but insurers often impose specific conditions and definitions for mental health-related disabilities. Question 7. Scenario: David is a construction worker who has a disability insurance policy with a 30-day elimination period and a benefit of $5,000 per month. He injures his leg while on the job and is unable to work for 45 days. However, he is still able to perform light duties, e.g., office work, and continues to earn $2,500 per month during his recovery. What will David receive from his disability insurance policy during the first 2 months? A. $5,000 for the first month and $5,000 for the second month. B. $5,000 for the first month and $2,500 for the second month. C. $5,000 for the first month and no benefit for the second month. D. $2,500 for the first month and $2,500 for the second month. Answer: C. $5,000 for the first month and no benefit for the second month. Explanation: David's policy has a 30-day elimination period, meaning he must be disabled for 30 days before benefits start. In the first month, he is disabled, so he qualifies for the full $5,000 benefit. In the second month, although he is still disabled, he is able to work part-time and earn $2,500, which reduces his disability benefits. However, he does not qualify for any additional disability benefit in the second month, as he is now able to work, and part-time work generally disqualifies for full disability benefits. Question 8. Which of the following statements regarding the elimination period in disability insurance is true? A. The elimination period is the time between when a disability occurs and when the insured is eligible to return to work. B. The elimination period determines how long the insured must wait after becoming disabled before benefits are paid. C. A shorter elimination period typically results in lower premiums for the insured. D. The elimination period applies only to long-term disability policies, not short-term policies. Answer: B. The elimination period determines how long the insured must wait after becoming disabled before benefits are paid. Explanation. The elimination period is the waiting period after the onset of a disability before benefits are paid out under a disability insurance policy. Shorter elimination periods typically result in higher premiums, not lower premiums. The period does not pertain to the time required to return to work, and it applies to both short-term and long-term disability policies. Question 9. Which of the following is typically covered under an individual disability insurance policy but may not be covered under a group disability policy? A. Maternity leave benefits. B. Coverage for disabilities due to pre-existing conditions. C. Coverage for a disability caused by a work-related injury. D. Coordination of benefits with Social Security disability insurance. Answer. B. Coverage for disabilities due to pre-existing conditions. Explanation. Individual disability insurance policies often provide more flexibility and may cover disabilities arising from pre-existing conditions depending on the underwriting process and exclusions. In contrast, group disability policies typically include exclusions for pre-existing conditions, which may limit coverage. Maternity leave, work-related injuries, and coordination of benefits are generally handled similarly in both individual and group policies. Question 10. How are disability insurance benefits typically taxed? A. Disability benefits are always taxable regardless of the policy type. B. Disability benefits are never taxable if the policyholder pays the premiums with after-tax dollars. C. Disability benefits are always tax-free even if the employer pays the premiums. D. Disability benefits are taxable if the employer paid the premiums and the policy was purchased through the employer. Answer. D. Disability benefits are taxable if the employer paid the premiums and the policy was purchased through the employer. Explanation. The taxation of disability insurance benefits depends on who pays the premiums. If an employer pays the premiums for the policy, the benefits are generally taxable to the employee. If the employee pays the premiums with after-tax dollars, the benefits are typically tax-free. The taxation of benefits is a key consideration in financial planning for disability insurance. Question 11. Which of the following scenarios would likely result in a disability claim being denied? A. The insured failed to seek medical attention within 24 hours of an accident. B. The insured's disability is caused by a non-work-related injury covered under the policy. C. The insured has a pre-existing condition, but it has been disclosed and accepted by the insurer. D. The insured is able to work part-time but still claims total disability. Answer. D. The insured is able to work part-time but still claims total disability. Explanation. A claim for total disability may be denied if the insured is able to work part-time, as most disability policies require the insured to be completely unable to perform any work to qualify for total disability benefits. The other scenarios would not automatically result in denial. A failure to seek timely medical attention could delay or complicate claims but does not automatically lead to denial. B. A non-work-related injury can be covered depending on the policy. C. Pre-existing conditions may be covered if disclosed and accepted by the insurer. Question 12. Which of the following is true regarding a rider ECA disability insurance policy? A. Riders are additional benefits that enhance the standard coverage but always increase premiums. B. A waiver of premium rider allows the insured to stop paying premiums while receiving disability benefits. C. Riders are automatically included in all disability insurance policies. D. Riders are exclusions that limit the scope of coverage under the policy. Answer. B. A waiver of premium rider allows the insured to stop paying premiums while receiving disability benefits. Explanation. A waiver of premium rider allows the insured to stop paying premiums once they begin receiving disability benefits, ensuring that the policy remains active without the insured having to make payments during their disability. Not all policies include riders, and riders may or may not increase premiums depending on the type of rider and coverage added. They are not exclusions but additions to the policy. Question 13. Which of the following best describes total disability under most disability insurance policies? A. The inability to work in any occupation even if the insured can work part-time. B. The inability to work in one specific occupation, but the insured can still perform other types of work. C. The inability to perform the essential duties of one's occupation even if part-time work is possible. D. A disability that only results from an accident, not illness. Answer. C. The inability to perform the essential duties of one's occupation even if part-time work is possible. Explanation. Total disability is usually defined as the inability to perform the essential duties of one's occupation. In most cases, even part-time work or alternative work that is not the primary occupation may still qualify for total disability benefits if it is proven that the insured cannot perform their core job functions. Question 14. Which of the following is an example of residual disability under a disability insurance policy? A. A person who is unable to work at all due to an illness. B. A person who can still work but at a reduced capacity, earning less than their pre-disability income. C. A person who is temporarily disabled but fully recovers after a short period. D. A person whose disability is due to a pre-existing condition that was not disclosed to the insurer. Answer: B. A person who can still work but at a reduced capacity, earning less than their pre-disability income. Explanation: Residual disability coverage is designed to provide benefits to an insured who is still able to work but cannot perform their job to the same extent as before the disability. This often applies when the insured can work part-time or at a reduced capacity and earns less income than they did prior to the disability. Question 15. Which of the following is most commonly covered under a disability insurance policy? A. Disabilities resulting from elective surgeries. B. Disabilities caused by chronic conditions such as arthritis that progressively worsen over time. C. Disabilities caused by normal aging or retirement-related health issues. D. Disabilities caused by injuries sustained while committing a criminal act. Answer: B. Disabilities caused by chronic conditions such as arthritis that progressively worsen over time. Explanation: Disability insurance typically covers disabilities arising from a wide range of causes, including chronic conditions that worsen over time. However, disabilities caused by elective surgeries, aging, or criminal acts are generally excluded from coverage. Chronic conditions like arthritis, which cause gradual impairment, are commonly included in policies. Question 16. Scenario: Samantha is a graphic designer with a disability insurance policy that provides 60% of her monthly income if she becomes disabled. She has an annual income of $72,000. If she becomes totally disabled and her policy pays out after the elimination period, how much will Samantha receive per month from her disability insurance? A. $3,600. B. $4,500. C. $5,400. D. $6,000. Answer: B. $4,500. Explanation: To calculate the monthly benefit, Samantha's annual income is $72,000, which is $6,000 per month. The policy pays 60% of her monthly income, which is 60% of $6,000 equals $3,600. Therefore, Samantha will receive $3,600 per month, not $4,500. Question 17. Which of the following is true about the tax treatment of disability benefits paid through an employer-sponsored group plan? A. The benefits are always tax-free regardless of who paid the premiums. B. The benefits are tax-free if the employee pays the premiums with after-tax dollars. C. The benefits are taxable if the employee pays the premiums with pre-tax dollars. D. The benefits are taxable if the employer pays the premiums with after-tax dollars. Answer: C. The benefits are taxable if the employee pays the premiums with pre-tax dollars. Explanation: If the employee pays the premiums with pre-tax dollars, the benefits received are typically taxable. If the employee pays the premiums with after-tax dollars, the benefits are generally tax-free. Employer-paid premiums generally result in taxable benefits, regardless of how the premiums are paid. Question 18. Which of the following types of coverage typically has a lifetime benefit option? A. Long-term disability insurance. B. Short-term disability insurance. C. Group disability insurance. D. Accidental death and dismemberment insurance. Answer: A. Long-term disability insurance. Explanation: Long-term disability insurance often offers a lifetime benefit option, meaning the policyholder can continue to receive benefits until they reach retirement age or for the duration of their life, depending on the policy. Short-term disability and group disability insurance typically provide benefits for shorter periods, and accidental death and dismemberment insurances a separate coverage that provides benefits in the event of specific injuries or death. Question 19. What is the primary purpose of a cost of living adjustment, COLA rider in a disability insurance policy? A. To reduce the premiums for the policyholder over time. B. To increase the benefit amount to keep up with inflation. C. To cover additional expenses incurred during the elimination period. D. To extend the duration of the benefit period. Answer B. To increase the benefit amount to keep up with inflation. Explanation. A COLA rider is an optional addition to a disability insurance policy that increases the benefit amount over time to account for inflation, ensuring that the policyholder's benefits maintain their purchasing power. This rider does not reduce premiums or extend the duration of the benefit period. Question 20. Which of the following best describes a group disability insurance policy? A. It is typically purchased by individuals to cover their personal income replacement needs. B. It is often provided by employers as a benefit and covers employees within a specific group. C. It is only available to large corporations with over 500 employees. D. It is designed exclusively for people in high-risk occupations. Answer B. It is often provided by employers as a benefit and covers employees within a specific group. Explanation. Group disability insurance is usually provided by employers as part of a benefits package and covers all employees within the group regardless of individual health or occupation. It is typically less expensive than individual disability insurance because the risk is spread across a larger group. Question 21. Scenario: Michael has a disability insurance policy with a 90-day elimination period and receives $4,000 per month in benefits. After 60 days, he is still unable to work due to a medical condition, but his doctor certifies he is able to return to work part-time for 20 hours per week. Michael's monthly earnings from his part-time work are $1,500. How much will Michael receive from his disability insurance for the third month of disability? A. $4,000. B. $2,500. C. $3,000. D. $1,500. Answer C. $3,000. Explanation. Since Michael has been disabled for 90 days and meets the elimination period, he is eligible for full benefits. However, since he is now working part-time and earning $1,500, his monthly disability benefit will be reduced. Michael's total disability benefit is $4,000 and he earns $1,500 from part-time work. The insurance policy will typically pay the difference between the full benefit and what he is earning from his part-time work. $4,000. 1,500 all equals $2,500. Therefore, Michael will receive $2,500 from the insurance policy. These questions cover a variety of topics related to disability insurance and should provide a strong foundation for understanding the key concepts involved in these types of policies. Question 22. Which of the following is an example of a lone occupation disability insurance? A. The policyholder receives benefits if they are unable to perform the duties of any occupation. B. The policyholder receives benefits if they are unable to perform their specific job due to a disability. C. The policyholder receives benefits only if they are unable to perform manual labor. D. The policyholder receives benefits if they are injured while driving a company vehicle. Answer B. The policyholder receives benefits if they are unable to perform their specific job due to a disability. Explanation. Lone occupation disability insurance covers the policyholder if they are unable to perform their specific job or occupation even if they could work in another job. This is more favorable for individuals who specialize in a particular field or profession. Question 23. Scenario: Sarah is a marketing executive with a disability insurance policy that offers a monthly benefit of $3,500. After being diagnosed with a serious illness, she is unable to work for 3 months. After the 60-day waiting period, Sarah receives a lump sum payment from her policy to cover the 90-day period of total disability. How much will Sarah receive in total? A. $3,500. B. $7,000. C. $10,500. D. $14,000. Answer B. $7,000. Explanation. Sarah's monthly benefit is $3,500. After the 60-day elimination period, she will receive benefits for 30 days. Sarah will receive $3,500 for the 30-day period. Total ben equals 30 days x 3,500 equals $1,000. Question 24. Which of the following is a potential drawback of a short-term disability insurance policy? A. It often provides long-term financial security for the policyholder. B. It may have higher premiums compared to long-term disability insurance. C. It typically covers only a limited period, such as a few weeks or months. D. It generally offers coverage for injuries related to high-risk activities. Answer C. It typically covers only a limited period, such as a few weeks or months. Explanation: short-term disability insurance is designed to provide coverage for a limited duration, typically between a few weeks to a few months. While it may cover a portion of the policyholder's income during this period, it does not provide long-term coverage like long-term disability insurance. Question 25. How does the elimination period affect the payout structure of a disability insurance policy? A. The longer the elimination period, the higher the monthly benefit amount. B. The elimination period is the waiting period before benefits begin, and it impacts how soon the policyholder receives payments. C. The elimination period is irrelevant to the payout structure of the policy. D. The elimination period refers to how long the policyholder must work before they qualify for benefits. Answer: B. The elimination period is the waiting period before benefits begin, and it impacts how soon the policyholder receives payments. Explanation: the elimination period is the waiting period that must be completed before disability benefits begin. The longer the elimination period, the later the policyholder will begin receiving benefits. Typically, the policyholder will not receive payments until this period has passed. Question 26. Which of the following is not typically a condition covered under a disability insurance policy? A. A permanent, total disability that leaves the insured unable to work. B. A temporary illness that causes the insured to miss work for a few weeks. C. A pre-existing medical condition that was disclosed during underwriting. D. A self-inflicted injury resulting from a suicide attempt. Answer: D. A self-inflicted injury resulting from a suicide attempt. Explanation: most disability insurance policies exclude coverage for self-inflicted injuries, including those resulting from suicide attempts. Conditions such as permanent disabilities, temporary illnesses, and pre-existing conditions, if disclosed, are generally covered subject to the terms of the policy. Question 27. What is the primary purpose of an integrated disability insurance policy? A. To provide separate benefits for short-term and long-term disabilities. B. To combine different types of insurance, such as health and life insurance, into one policy. C. To coordinate disability benefits with other sources of income, such as Social Security or workers' compensation. D. To limit benefits based on the severity of the disability. Answer: C. To coordinate disability benefits with other sources of income, such as Social Security or workers' compensation. Explanation: an integrated disability insurance policy coordinates the benefits with other sources of income, such as Social Security, disability, or workers' compensation, to ensure that the policyholder's combined income does not exceed a certain percentage of their pre-disability earnings. This is done to prevent overpayment. Question 28. Scenario: John is a software developer with a disability insurance policy that pays a maximum monthly benefit of $5,000. Due to an accident, John is unable to work for 3 months. His total earnings before the accident were $6,500 per month. How much will John receive from his disability insurance policy for each month of disability? A. $4,500. B. $5,000. C. $6,500. D. $3,500. Answer: B. $5,000. Explanation: the policy will pay John the maximum benefit amount of $5,000, as it is the maximum monthly benefit stated in his policy, regardless of his previous earnings. If the policy had a lower benefit limit based on a percentage of income, the calculation would differ. Question 29. Which of the following riders in a disability insurance policy can help increase the benefit amount if inflation occurs? A. Non-cancelable rider. B. Residual disability rider. C. Cost of living adjustment COLA rider. D. Waiver of premium rider. Answer: C. Cost of living adjustment COLA rider. Explanation: the cost of living adjustment COLA rider increases the benefit amount over time to help keep up with inflation. This ensures that the benefits retain their purchasing power over the years, which is especially important in long-term disability insurance policies. Question 30. Which of the following factors is typically not used to determine the premium of a disability insurance policy? A. The policyholder's occupation and job risks. B. The policyholder's age and health status. C. The policyholder's monthly income before disability. D. The policyholder's marital status. Answer: D. The policyholder's marital status. Explanation: the premium for a disability insurance policy is typically influenced by factors such as the policyholder's occupation, due to risk level, age, health, and income. Marital status, however, does not generally impact the premium for disability insurance.